Hello students, welcome to the session. In this session, we will be discussing the answers to your mock test papers. So coming to the first mock test paper, you had a paper for 100 marks and keeping the normal time limit for 3 hours. I hope you have answered the paper assuming that you are in the exam hall, keeping the time limit and sitting in an exam environment. Okay, chalo, let us try to discuss the answers. Question number 1 is always compulsory and you need to answer any 4 questions from the remaining 5 questions. I'm not going to keep a choice. I'm going to discuss all the answers. So let us directly step into question number 1. State with reasons whether the following statements are true or false. Most of the students answer true or false, but they forget to note that you have to also give a reason. State with reason whether it is true or false. First one, the balance in petty cash book represents an asset. True or false? True. Yes, sir. So coming to the answers, the balance represents the cash which is physically existing and therefore it is an asset. Yes, sir. So the first statement is true. Directly self-explanatory, cash balance physically existing with us, therefore an asset. Finished goods are normally valued at cost or market price, whichever is higher. Now, this statement is false. Why? Because as per accounting standard 2, finished goods are normally valued at cost or net realizable value, whichever is lower. It is not valued at cost or market price, whichever is higher, but it is valued at cost or net realizable value, whichever is lower. Subscriptions received for current year shall be shown in the balance sheet as a current asset. Now, where are we talking about subscriptions? Subscriptions is an income for your non-profit organizations. Is it a revenue income? Is it a revenue item or is it a capital item? Subscriptions are revenue items. So will you show it in the balance sheet? No. So this statement is false. Current year subscription shall be shown in the credit side of income and expenditure account and not in the balance sheet, as it is not a capital item, it is a revenue item. Therefore, this statement is false. Coming to the fourth one, when shares are forfeited, the share capital account is debited with called up capital of shares forfeited, and the share forfeiture account is credited with calls in arrears of shares forfeited. Now you need to remember the entry for share forfeiture, what is going to be debited, what is going to be credited. Of course, we know share capital will be debited, share forfeiture will be credited, but here they're also speaking about the amount. Share capital will be debited with called up capital. True. Share forfeiture is credited with calls in arrears. False. So this statement is false. When shares are forfeited, the share capital account is debited with called up capital. Up to there, the statement was true, but then share forfeiture account is credited with the amount received on shares forfeited. It is not the amount of calls in arrears, it is the amount received on the shares which have been forfeited. Therefore, statement number 4 is false. Coming to statement number 5, discount at the time of retirement of a bill is a gain for the drawee. What do you mean by retirement of a bill? Retirement of a bill means that the payment for the particular bill is happening before the maturity date. So you have the date of bill drawn, you have the term of the bill, and you have a maturity date. Before the maturity date itself, the person wants to pay for the bill, the drawee wants to pay for the amount of bill. Now, is this discount and a gain for the drawee or is it a gain for the drawer? Coming to the answer, true. Discount given at the time of retirement of a bill is a gain for the drawee and a loss for the drawer, because the drawer is going to receive lesser amount. The drawee is making an early payment, so he will pay less income for the drawee. The drawer is going to receive less, therefore loss for the drawer. Gain for the drawee, loss for the drawer. Coming to the last statement, bills receivable and bills payable books are types of subsidiary books. Yes. What are the types of subsidiary books that we have? Purchase book, purchase return book, sales return book, cash book, bills receivable book, and bills payable book. So yes, they are types of subsidiary books, which is an alternate to journals. Subsidiary books as an alternate to journal entries. So Remember, whenever you give straight true or false, do not just state true or false, also give a valid reason. Even if the statement is true, try to write something about it, not just the statement itself. You need to give a valid explanation for a true statement also.